The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for unusual options activity alerts, advanced trading strategies, cutting-edge education, detailed market updates, and breaking customer activity. It's time for the One Option Show to rule them all. It's time for the Option Block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from OptionPit.com, Mike Tusaw from KnowYourOptionsInc.com, and John Griegas from Options Express.
Welcome back to the Option Block, and we are back again on our timely schedule. We had a few delays here and there, but that's what happens when you're coordinating the schedules of such an all-star panel like we have on the show today. And someone mentioned the other day that I don't introduce myself on the show, and maybe that's because most people are listening to it on our radio network, so I assume they already are familiar with my voice.
Well, you need no introduction, is what I would say.
That's true. That's true. I am larger than life.
Now, see, I was about to say how much of a team player you are for not even needing an introduction, but then when your larger than life comment, I got to withdraw it now.
Well,
of course, I am Mark Longo, and I am your host for this roundtable extraordinaire, full of very silly banter and Optimus Prime comments. You can find us, as always, on theoptionsinsider.com, where we get the bulk of the information for this show comes from there. And I'm sure many of you are listening from our Options Insider Radio Network, whether it's streaming from our site or on iTunes. And joining me, as always, back from the mountains, and of course chasing snowmobiles, is Uncle Mike Tusaw from Know Your Options Inc., the financial advisors extraordinaire. Uncle Mike, how are you doing this fine Thursday afternoon?
If I was any more excited, it would be illegal. I'm just excited to be here. Exciting times, exciting market, exciting life.
I know why you're excited. We'll get to it in a few, but one of your picks from last show has gotten some life. But and then, of course, listeners have sure picked up on his voice. It's kind of hard to miss. It's kind of up there in the upper octave ranges. Sometimes you might have to dial down the treble on your MP3 player or your computer to be sure you doesn't crack anything. Of course, I'm talking about Mark Tinny McRib Greasy Meatball Sebastian. Mark, how are you doing today?
Oh, I'm doing great. I'm getting excited for these Intel earnings that I think are going to be fun and exciting. So I can't wait.
That takes me back to my old days of standing in the Intel pit and watching those earnings come out and watching the stock bounce around like a madman for a little while, then go nowhere.
Mm-hmm. Yes.
And, of course, last but certainly not least, the man, the myth, the legend himself, all the way from Options Express, dragged kicking and screaming from the trading desk because he is so busy today. It is Mr. T-Nav himself, Tim Navabi. Tim, how are you doing? Welcome back to the show.
Hi, Mark. How are you? I'm doing great. Thank you very much. I'm very excited to be here today.
And I'm glad you can
and you sound excited. You know?
Oh, thank you.
It's awesome.
Appreciate that. Yes, I've listened to a couple shows, and I said, I think I need to sort of liven up a little bit, and I'm trying my best now.
Tim has that Stephen Wright delivery,
He does. That's exactly what it is. It's deadpan humor that I can't get enough of, and
Tim, you'd be great on like a British sitcom, where they do a lot of deadpan stuff. You'd be perfect for that.
I bought some powdered water the other day, and I'm not sure what to add. I know all the Stephen Wright jokes. I got them all.
And with that, we will roll right into the trading block.
The Trading Block.
And welcome to the Trading Block. This is the segment of the show where we discuss what's moving the market and what's catching our eye today from both a micro and a macro perspective. And we'll start it off. I know we'll just get it out of the way now. I know I know, Uncle Mike, you're quite happy today, and I think I have a guess why our keen-eared listeners will remember that you recommended a relatively new ETF that a lot of us haven't heard of before on the last show. It was KO, was the coal one, and of course the Australian floods seem to be doing fairly well for coal today. KO isn't moving huge, but it's moving, and so I'm sure you're happy with your foresight on coal today.
Well, the truth is, God told me that there was going to be floods in Australia, so that's the real reason. No, just kidding. KOL, I think it's a longer term recommendation that we have some of our clients in right now. So obviously, we're not going to complain about the shorter term. If anything, it's kind of a pain in the neck that we're going to have to roll up our puts now. So. Yeah, it's worked out well, and we're excited about it. It's more of a longer-term play, and the floods in Australia are obviously something that can definitely help the cause, but I don't want to make light of someone else's misfortune, and especially the Australians that are going through it. And not only that, my parents are actually down there on a vacation that my mom's been looking forward to for 35 years, so I don't know when exactly they're in each city, but I hope that they're not in the flooded city right now, so...
That is, I have to admit, that is one of the real problems with trading in something like oil or KOL, or a lot of times these drug stocks. One of my most profitable trades ever happened because a drug that Elon was working on killed a bunch of people. I know a lot of guys that made money off of Merck when the whole Vioxx thing went down.
Those are the trades you can't really go home and share with anyone else. Like the guys who trade, lumber over the hurricanes. It's kind of hard to get excited that a hurricane just destroyed half of the Southeast, and you made money on lumber futures.
Yeah, but there's a good side of that. For instance, if you were long Denadron straddles when it turned out that their AIDS medication was decent, that might be a happy feeling type of win.
Yeah, that's true.
And then the other thing with this is that the stock, it's not the investor's fault that they're in a commodity or that they're in the drug plays that you were talking about. Money's going to be made either way. And if ultimately we preach to people that trading needs to be an emotionless game, then we need to have that mentality as traders. So let's say, for example, cigarette companies. Mm-hmm. I personally have very big issues with tobacco. I mean, not issues with it. I don't think it should be illegal, but I really hate cigarettes. I hate cigarette smoke. And, I grew up in a house where smoking Camel non-filters was the norm. And of that, yeah, in the house. And so because of that, the good thing about it is that I've never smoked I don't think I've ever smoked more than 2 puffs of a cigarette in my entire life. But my point is let's say that I want to really fix those evil tobacco companies, let's say. Once again, I have no moral issue with them, but if I'm buying calls on cigarette companies or buying the stock, I'm making money. That's more money in my pocket that I can put to good use. One of my favorite stories, Sebastian, I know you'll remember this guy, Brian Bosworth. He is from the 80s.
Oh, yeah, the Boz.
One thing that he used to do when he would go, everybody hated him when he was in the NFL. And One thing that he used to do is whenever he'd go to an opposing team's city, there'd be T-shirt sales out there saying, "What is a Boz worth 0?" Or just things like that. And so it turns out that the person who was actually they sold out every time, but the person who was actually selling him was none other than the Boz himself. It was his company that would go out and sell those shirts. So I kind of view it that way when we're trading in the markets. This is an emotionless game, and we can actually do good by the fact that even if we made money off of a tobacco company, I can put money into a church or whatever you want to take a bad and make it into a good.
Yeah, no, Mike, have you guys that know your options ever had a client want to get involved in one of those live with my conscious funds or green funds or value funds where it's not like Value Line, it's like we stand for family values or anything like that? Have you ever had a client want or looked at those type of funds, because they do exist for those that have a conscience?
And you know what? I wouldn't have a problem with a fund like that. It's just that not the whole world doesn't have the same view that I have. Mm-hmm. I'm trying to view the market as, and to answer your question, no, we have not, but I wouldn't have a problem with it because I can appreciate people wanting to do better and things like that. And you guys may or may not remember this. I don't think it's out anymore, but do you guys remember the Syndex?
Oh yeah,
No.
yeah, that was a big one a few years ago.
Yeah, the ISE, and I don't know if it's still around anymore, but the ISE had an index out there called the Syndex, to where you could trade options on it, and it was all tobacco companies and pretty much all the quote-unquote evil companies out there. And when people would say how evil it was or whatever, then my response would be, well, just buy puts on it then if you don't like it that much. So
there's still a fund out there called the Vice Fund, VICEX.
Mm-hmm.
And that's it's weapons, it's gambling, it's booze, it's cigarettes. There's no women in there though. There's no,
nice.
you know.
Nice.
It's a typical
no
Sebastian
Rick's.
Friday night fund.
They don't have Rick's. You can. What about Rick's? Yeah, the Sebastian's Friday night.
Guns and booze and no woman. That's a Sebastian Friday night.
You left out Optimus Prime. No, they don't have Rick's Cabaret in that because that's one of those you can actually invest in. So
yeah, I know. I was no Rick's.
No, yeah, we know you know Rick's. So, but that's interesting. So,
I'm still blown away by what you said a few minutes ago. You saw that Brian Bosworth was some sort of genius merchandiser.
Make everybody hate you. Sell merchandise that makes people. That's brilliant.
That's fantastic. I actually have a modicum of respect for that guy now after hearing it.
Didn't say anything about his NFL football playing ability, but I thought that was an ingenious idea that he had.
He had the ability to negotiate himself $20 million contract and play about 2 games and walk away. That's not a bad deal either. Since we're hitting on the commodity tip with coal and stuff, we might as well go into it a bit. Looks like the commodities continued their sell-off again today. SLV taking a big hit, down $1, 3.4%. It's exactly at that 28 level now that we were discussing, I think, a week or so ago, trading in and around the 28 level. Now it closed exactly at 28. GLD closed 134.05, down $1.41 or 1% exactly. So, yeah, the commodity sell-off looking like it's getting some legs again.
Mm-hmm. Yeah. Natural gas was down pretty big. Cotton, orange juice. Yeah.
Well,
copper.
Didn't the dollar pick up some value today as well?
I have the euro up on the day.
Oh, well, never mind. Huh.
You're right. It started out a lot. I think it started out higher.
Yeah. Yeah, I was looking at that. Well, it's weird. All right, well.
Tim, how did your bail do today? I know you like that one. We were talking about it on the last show, actually.
Bail today, let me take a look here. BAL today, down 4%. So
the commodity.
Wasn't that your nickname in college, Tim? The sugar index? Isn't that what the ladies called you?
Tim the sugar daddy
index. Yeah. Oh, yeah, exactly. That was my understanding.
Nope.
So are you guys, since you guys are heavy commodity guys, are you at all concerned here, or are you thinking this is just typical profit taking after the extreme run up that these indexes and these metals and these commodities have had?
Yeah, I think that's kind of the case here. I don't think any of us are really calling any directions in the commodity markets. Just a lot of volatility right now, and that's what we're seeing. But we like the busyness. So when these markets kind of move like this, we don't mind it. We're just busy.
What about you, Tusa? Are you adjusting any of your positions based on this, or are you still? I imagine you still haven't hit your puts yet, so you don't have to worry about the downside of your collars there.
No, not yet. It hasn't come down that much, so we're still just waiting and watching. But we're ready.
And of course, there were more things happening in the market today than just commodities. The jobless claims seemed to put a bit of a hiatus for the bulls out there today, and the market actually didn't explode as normal. We probably should give the closing rundown too. We got so busy getting into the coal that we didn't even give the overview. It was another slightly weaker day on the street today. The S&P closed down about 2 points, Dow down 23.5 points, NASDAQ down 2, and the VIX pretty much unched up 0.15. And it was a relatively slightly weaker day today. The bulk of that weakness seemed to come out of the jobless claims They had the biggest rise in 6 months, and a lot of people are keying on to unemployment these days based on what Bernanke said on 60 Minutes a few months ago, that he's really watching unemployment to decide what he's going to do with future cash infusions for the economy and future endeavors at the Fed. So unemployment is still and jobless claims are still big movers, even though today it didn't really seem to do much except take the wind out of the sails of the rally. We also saw Marathon Oil making some big news with their planning to spin off their refining operations. Not a big surprise. A lot of risk in that area these days. And then, of course, more weakness came out of Merck because they had some disappointing drug news. So those three issues seem to weigh on the market a bit today. Anything else you guys are watching today?
I'm watching Intel right now as we speak. I think it's kind of the first bellwether to report of, you could say Alcoa, but of really kind of the high value, high technology companies. Intel's kind of the first one reporting. And they just announced their results. We were talking about whether Intel could buy NVIDIA at the last podcast.
Yeah.
Their net income was more than the market value of NVIDIA for the full year of 2010. So.
Oh yeah, they could buy them without breaking a sweat.
I mean, it'd be like, it's nothing, and. Big earnings per share. Results came in pretty decently. Right now, the stock is trading up about another 25 cents, call it a little over 1%. It's interesting. The option flow at the end of the day was very bearish. I saw a lot of, Intel closed around 21.30. I saw a lot of 21.20 put 1x2s. Really, the market's position based on what paper was putting on was they were long one of the 21 calls, short 2 or 3 of the 22.5 calls, long one of the 21 puts, and short 2 of the 20 puts. So it kind of would have looked like a weird long butterfly that had a bearish tendency that probably had taken in a bunch of credit. So it's really interesting what we're seeing. Intel rallying harder. It looks like it's going to be up. At least for right now. Their conference call starts in about 6 minutes, so we'll know more then. But rallying now up about 30 cents. The way the market was positioning was for absolutely bearish movement, and the stock is, countering that. The at-the-money straddle went out. It was trading as low as 90 cents, went out about $1, which is about a 25-cent premium to the absolute low in implied volatility that it's hit over the year. So relatively cheap, and, even if we're at 60 cents, I think that straddle is going to end up kind of paying off with the amount of time we have left over the next couple of days. So, Mark, any thoughts?
That's not a bad buy. I obviously have a long personal history with Intel, and this is the one that it's kind of an interesting name to watch over the last few years because they're kind of reminiscent of Microsoft in that sense that if you had this name for most of the past decade, it was a lost decade, and they really didn't move much until the last few years, and they really seemed to start picking up steam a bit last July after their earnings, and the stock started taking a bit of an upward turn, but it's still been relatively range bound. 18 to 22 range. They had a bit of a breakout there a few months ago, back up to 24, but they've come off since then. I never watched the initial stock numbers after Intel comes out because this thing, I know in the first initial minutes, it vacillates ridiculously widely. I used to put flyers a couple handles away from where it closed after the earnings. I would get hit all the time in the after hours, immediately after earnings. It was amazing the prints I would get. I would get $2, $3 prints away, for decent amounts of size, just to work them for scalps, just because I knew this thing would vacillate so much. And It's kind of actually being relatively staid right now, I would say, compared to what we've seen in the past. It's up like 40 cents, a bit of size on the offer, but nothing too big. But yeah, Intel, and like I said, $1 for a straddle with a week to go and earnings tonight. That's not a bad rate. You still have a week to go on that, and it's obviously going to come off a bit today. But if these things move quite a bit, it'll pay off. And just, like I said, you have a whole other week to play with that and to scalp with that. That's not a bad trade either way if you picked it up for $1.
No, but the 21, 22.5 kind of 1x2 spread was a real good trade that the market kind of had on, and so that actually is going to will probably end up being a winner to those that put that on, a pretty significant winner, because those 22.5s are going to go to zero tomorrow, and that call will be worth at least 70 or 80 cents. So that'll be a nice win.
Those spreads are, that's a pretty tight one, so it's not that bad. But any sort of vertical ratio like that used to be ridiculously hard to put on, especially to the upside in Intel, because this is such a heavily institutionally tracked stock that the skew is just so predictable every month. They're going to come in with their fund buys of puts and selling of calls, and so you have virtually no premium to the upside in any of these calls. So dumping a 1x2 like that, this is the tight ones, you might be able to get away with it, and you have some earnings juice to keep that inflated. But usually if you did a 1x2 like that, you were getting very little for the two side of the equation. It wasn't really worth doing. In fact, what we used to do was just really be very reluctant to buy anything on the upside and sell at our first opportunity, because we knew every month that skew was going to collapse to the upside. And you had a very limited window in which to get off any sort of upside premium before big call dumpers came in and took it away from you again. I was out there I forgot what year it was actually, when they really just imploded 30-odd% off of their earnings.
Oh, that was crazy.
And I came in that morning actually, and there was actually a crowd around our pit, because Intel was still the big tech name back then. And there was a huge crowd. It was like trading to an audience. It was the weirdest thing I've ever seen, because the thing is open up 35% down, and it was just, if you had any gamma, any bullets at all, you could sell these straddles and sell things for just vol rates that were absurd. It was a fun day if you had downside, let's just say that. All right, and with that bit of nostalgia, we will close out the old trading block and move right into the odd block.
The odd block.
And welcome to the Odd Block. This is the segment of the show where we discuss what's lighting up our tape today in the options market. And we're going to start off with good old Marvell, the MRVL. This is a name that does about 19,000 contracts a day, and they did over 26,000 today. They closed at 21.43, up 44 cents. If you don't know them, they are a semiconductor company, and we saw a decent-sized bullish call spreader moving into Marvell today. He picked up about 3,000 of the Feb 21s for 87 cents, and then he sold 3,000 of the Feb 23, so he did that Feb 21-23 call spread for 65 cents. And this is just an interesting one because this guy sees, obviously, some still potential for upside here in Marvell. The stock's trading at the upside of its range, so this guy might be expecting a little more in the way of upside, but he's expecting, obviously, some bullishness in the semi sector. And this is a name I haven't really traded in a while, so I haven't been watching it particularly. But it's an interesting one nonetheless, just to see that there are still some tech bulls coming back to play, and they're coming out to play in Marvell. Sebastian, anything you want to throw in there, or Mike or Tim?
Nothing in particular. It makes sense with all the bullish play. There was a huge, and stop me if I talk about that, there was a massive tech buy in XLK over the last 2 days. Traders have come in and bought the 26 calls, paying 21, 22, and 23. It started out with 100,000 of them on Tuesday, and then there's been about another 70,000 that have traded over the last couple days. So
it was like 36,000 today went up, yeah.
36,000, 100,000 on Tuesday, 45,000 yesterday. So we've got some serious bull playing on this XLK. So it might be kind of a sector thing that between now and end of the month, a lot of tech announcing earnings. Maybe we've got, maybe this is one of those that they think is going to kind of piggyback on all the positive earnings that may or may not be coming out.
I think they all heard that Tusa is diving into Cisco and is bullish on tech again, so they're all just following suit.
Yeah.
They're the lampreys following the big shark into the feast. They know that where Tusa goes, they want to be.
We're a slow-moving shark. We don't move in and out that quick, so watching us trade is like watching paint dry.
But yeah, that's just so interesting. Add the money to the upside call spread in Marvell for some decent size. So if you're a tech watcher, between that and the ridiculously sized sector buys we're seeing out there, obviously some size money was convinced coming out of CES there's going to be some good earnings going forward. I think. So people are, for the first time maybe in a while, seriously bullish on tech. And then moving on to another one, YRC Worldwide. YRC.
Oh, yeah.
You guys know this one? Yeah, this is not one I was that familiar with until it popped up on our screens today. This is a name that does about 4,000 contracts a day. It did 32,000 today. It closed at $3.42, down a dime. This is a trucking company, in case you're not familiar with it. And the bears appear to be out in force, but maybe not with this one. We saw a sizable credit call spread going up. This trader came in and sold 15,000 of the April 3/2 for 45 cents. And then he bought the same number of the April 5s for 18 cents. So that works out to a net credit of 27 cents a contract. And so obviously this guy wants thinking the stock is going to rise about 8.5%, 9%. And that's kind of the initial opinion. This is a name, like I said, that I hadn't really followed or wasn't that familiar with the flow out there. So I took a look at it after the guys over at Interactive Brokers wrote up this trade for us and alerted us to it.
It was it was interesting. Sorry.
A couple of things are interesting about it. This is another one of these names, kind of like IPG and some other ones we've talked about, where they don't really do much volume, isn't that much open interest. And yet, if you look at where this trade went up today, it went up on the 3/2 and 5 strikes in April. And if you look at the one strike that has the most size of anything in all of YRC or YRCW, it's that April 5 strike. There's 18,000 of the calls in open interest, and looks like a straddle went up a while ago, and or something to that size, because the calls and puts both have over 17,000 of open interest on there. So
see, that was my thought on this thing, was that this guy was rolling.
This guy's rolling down. That's what I was thinking too, because there's no way it's a coincidence that this is the one strike that has any sizable open interest on this, and this guy comes in to do almost the exact same amount, 15,000, and he's rolling them down. Maybe, I don't know what that initial trade was. Maybe he must have shorted that straddle.
Yep.
And so now he wants to maybe roll that down into some sort of gut strangle, the 3/2 5 strangle in YRCW. It's an odd coincidence that this spread would go up on such a strike like that. He's probably rolling his movement down, and he wants to maybe adjust his play. But yeah, so that was an interesting one, I thought, just because it's one of these names that doesn't do any real activity. If you look at the rest of the strikes around the April 5s, you have a couple hundred open interest here, 50 there. So, and then all of a sudden 18,000 and 17,000. So not a coincidence, I don't think, that this trade went up on these strikes. And then, just to finish it up today with a little bit of a roundup of some names we talked about before. We talked about IPG over the last couple of shows. They're still doing some volume out there, not the 15,000 contracts that we did the other day, but they're still doing some paper. They did about 1,200 contracts today, and the stock closed around 11.13. Our listeners will remember over the last few shows, about 16,000 or so of those July 12 calls went up. The various range of prices, mostly with buyers. And today we're seeing some people look like they're spreading off against those buys. We saw some sellers coming in on the July 12s, sold about 250, 300 of those for about 85 cents. We also saw 400 April 10 puts getting bought for about 40 cents. And those ones are kind of the outlier, because we have seen a lot of call buyers, primarily bullish paper in IPG. And remember, this is a name that traditionally did only a couple hundred contracts a day. So 1,200 contracts is still a ton for this name. And then we saw people legging into that April-July 12 call spread as well. They sold about 200 of the April 12 calls for 40 cents. So people are trying to spread off some of that name. And then, of course, we have Sebastian's favorite RDN. And they, what's interesting about this is we've seen a lot of bullish paper in this one over the past few weeks, just nonstop call buyers, Jan 9s, Jan 10s, Feb 9s, Feb 10s. And it looks like today, it's on a price variation, so these things always make me leery, but it looks like if you look at the markets, somebody came in today and bought about 1,500 of the Feb 9 puts for in the range of 60 to 65 cents. And that one kind of caught my eye, because not too many bearish players coming out in RDN these days. So
if you look at its chart, this is the time where you want to get bearish, based on how it's been trading over the last 6 months. I'm out of my call spread, Mark. I wanted to.
Oh, did you? You took the profits and ran. And where'd you get out?
Sold it at a half, 50 cents.
Not a bad deal.
Yeah, no, I had to leg it, but it worked really well.
See, that's better than my sale of the stupid 9s for 35 cents. So there you go.
Yeah. The other one I wanted to point out was, did you see PPL today? This was really interesting. Some podunk power company in Allentown, a beautiful city, by the way, Allentown, Pennsylvania.
That's where all of my unusual activity comes from, Allentown.
Just ask Billy Joel.
Really weird. This company some power company never moves, never does anything. All of a sudden today it's down $1. Some guy comes in and buys 17,000 of the April quarter puts for 75 cents. Then they kind of rally up to about 85, 90 cents. There's something screwy going on here because this stock has no volume. I mean, the average volume is 500 contracts a day. It did 20,000 a day. The average open interest is about 23,000. So really interesting. Something's awry.
Yeah.
I don't think that was some owner of the stock buying 80-cent puts against his PPL Corp.
I was going to say, this has insider written all over it, whether it's some guy who thinks he knows something or someone who maybe is contractually limited in how he can sell his stock maybe, and there's not enough underlying to go around, so maybe he wants to put on a downside position or a short position with the puts instead of the stock. Mm-hmm. The two ways I would look at it, like I said, people who are going to do size puts in a power name, a small regional power name like that are probably relatively few. So
yeah,
that's probably a good one to keep an eye on here.
Interesting trade would be like the 25-26 put spread. Looks like it marked. I think you could sell the 25 puts at maybe 85 or 90 cents. You could probably buy the 26s for $1.35. Trading 25.73, buying the 25-26 put spread for 50 cents is not a bad play. Not a bad play at all. You're getting real nice volatility skew. The 25s are actually priced higher in vol terms than the 24s. So that's the strike to sell if I was going to sell anything.
Well, yeah, 17,000 of them went up, so that's not surprising.
Yeah.
There's a little bit of a bump. It's interesting.
Yeah.
If you look at this one, this is, it said, hitting the downside of its range for the last few years. So this guy's obviously thinking there's no reversal in the future for PPL.
Mm-hmm.
Maybe he works at the power plant and he knows that there's something wrong with the scrubbers or something like that, and so he's just he put in a call to his broker.
Maybe he went to a bar called the power plant and didn't realize that this PPL is not the same thing.
Chusa, didn't you tell me you took a quick weekend trip to Allentown a few weeks to do some research last weekend? How'd that work out for you?
I'm living here in Allentown. I'm really disappointed in you, Mark, that we haven't had any Billy Joel references.
That one's actually a little too
sing
easy.
it.
That's a little too easy and a little not obscure enough for me. Everybody knows that song. And I believe that's actually maybe a little, isn't that the 70s maybe even?
No, that's the 80s.
Is it? I don't know.
82.
All right, I'm gonna be over here fixing myself up a shut up sandwich. So.
Mm-hmm.
All right.
So with that, with Sebastian actually shutting himself up, which is a relatively rare occurrence on the old trading block, the option block. We will close out the old odd block and roll right into the Express/Spread block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express/Spread block. This is the section of the show where we all sit back and sip a beverage, and we allow Tim Navabi to fill us in on all the goings-on behind the scenes in Options Express land. So, Tim, what is going on behind the old curtain in Options Express?
A lot of order taken. Like I said earlier, we are pretty busy these days. And it's just interesting, you have a long holiday, everything gets slow from, Thanksgiving to New Year's, and then January comes, starts out a little bit slow, and then all of a sudden it just picks right back up, and just kind of really takes your takes you by surprise. You forget what it's like to be like that. Something that I wanted to do, because you guys have asked before, we have this on our site as well, where we can tell you, what everybody at Options Express is trading. So I decided to, take down the symbols of what's everyone trading, and here they are. I mean, it's the SPY, that's the number 1, and number 2 is the SPX. Number 3 is Citigroup, 4, Ford, Apple, Netflix, and Bank of America. So those are the most popular equities right now being traded at Options Express.
Options Express customers aren't loading up on like RDN or something crazy like that.
Yeah, not today.
One important thing for when I'm looking at volume and things like SPY and SPX is I like to group those two together. The SPX is 10 times the size of the SPY, so I'll take that SPY volume and divide and cut it by down to 10% and kind of add that two together. And that way I can get a real idea of how much people were really playing in the big boy index. And that can really be of use to a lot of people because, with the size of the SPX, if you took the SPY to scale relative to the SPX, it pales in comparison in volume numbers to how much paper goes through that big boy product. And so it really does give me a great gauge. I'll actually add in the ES and the SPZ options when I'm doing that too. So it's real interesting.
Yeah, that's real nice. I mean, I really like that. It's the first time I've heard of someone doing that, and I can totally see why you would do that, and I think you'd probably get the results you're looking for. Yeah, I'm going to ask you about that in the future.
All right.
Anyways, so those were the equities. And, Ford's been on that one for a while. Ford, Netflix, I've seen those there for a while.
Yeah,
Citigroup,
Netflix.
Apple.
The reason Netflix leapt out to me before is that Netflix, between you and whenever Rob and John come on, they seem to bring up Netflix a lot too. There seems to be a certain love from OX customers for Netflix. You guys are I don't recall seeing Netflix lighting up our most active anytime recently, and yet every time I talk to Options Express guys, it seems like the OX customers are just diving into Netflix with a vengeance.
Yeah, I agree with you. And I think part of that is that it's something that most people know, and I think that with its recent run-up and recent volatility, I think it's giving an opportunity to, people who are, who like to think of themselves as average option traders, and they say, okay, I know Netflix. Okay, here's Netflix. It's really moving around now. Okay, let's start to trade some of these options. I think that's the real kind of reason why it's up there, compared to AT&T, where maybe people are just kind of buying these things because they think, okay, it's just going to slowly go up. I mean, I know with the news in the last few days, but, I think it gets people excited, I guess, is Netflix.
Well, one interesting thing about Netflix is that if you could prove that you traded options in the last 30 days, you could move up the queue for the Expendables, which I was excited about. So.
That movie must have just blown your socks off when it came out. It was every 80s action star in like one movie.
I passed out in the middle of it. It was like a fever dream for me.
It'd probably be the next best thing to them making like a Cobra 2 for you.
Oh my gosh! I mean, seriously, I was in like a fever dream. I'm laying on the floor. I'm catatonic. There's foam coming out of my mouth. And then it was over, and I finally was able to breathe again. It was wonderful.
Do you own every single collector's edition possible of that movie?
Oh, twice. The ones that I watch, and then the ones I actually collect, like any good collector would have.
Yeah, you can't break the tin on those. Those are worthwhile. That big foam Sylvester Stallone head full of DVDs, that's gonna be worth something someday. So hold on to that.
Exactly. So all 5'6".
As far as some of the other movers today, and I know we've really taken it some good time today, so I'll kind of move it along here. Orange juice, that was a pretty big mover to the downside today, all really much based on the supply and demand estimates. That was trimmed by about 2%. So despite the cold weather, Orange juice is moving much lower on that supply and demand report.
Yeah, you think this would be boom times for FCOJ, given the fact that everything's frozen down there in Florida right now.
Mm-hmm.
Tim, what else is going on in Options Express?
Some of the other movers to the downside, we did talk about silver. We talked about cotton. The other one today was natural gas. No comment, Mark, huh? Anyway,
we've done natural gas. We've made that joke so many times that I put that one to rest.
It's a favorite of mine. I mean, I will always use it in the trading room. So yes, this is moving lower based on some forecasts of warmer weather and the build that was less. Hold on one second here. The inventories fell less than the estimates. So that's the reason for the natural gas fall today. As far as on the upside, the big one today, corn. It brushed up against 30-month highs, and that's basically on the supply and demand report as well. A lot of demand and not much supply. That's really the story on corn right now. I don't have any other sort of numbers as far as support and resistance on that, but finally, one of the other movers today started out higher. I think it moved a little bit lower at the end of the day, was crude oil. And the reason for the crude oil move today was basically that the concerns about the disruptions, those are starting to fade. And then we also had an inventory report, which had crude inventories fall, but gasoline stocks actually soared, is how they're describing it. So that's kind of what we had going on.
Wasn't that from the MRO deal, though? That's why gasoline stocks were up so much, right? Marathon announced that they're going to be splitting up the company into a couple of parts.
Yeah, they're spinning off their refining and other production capabilities, I believe.
Which seems to be a trend, and I think a lot of people think that's going to be the next boon is, a lot of that spin-off activity. Should be interesting.
Yeah, okay. I'll buy it. And I don't see it here. I didn't
Boy, that's an easy sell there.
All right. And with that, we will close out the old Express/spread block and roll right into Around the Block.
If you're interested in becoming a professional options trader but feel a stronger understanding of trading fundamentals is required before pursuing a mentoring course, sign up for Option Pit Mentoring's Level 2 Prep Course. Topics covered will be volatility, the Greeks, position setup, and basic management of income option positions. Classes start on January 24th. Register at optionpit.com/event. For Option Block Insider Radio listeners only, receive a $100 discount when you use the promo code OI2011. That's optionpit.com/event.
Around the Block.
And welcome to Around the Block. This is the segment of the show where we discuss what's on the horizon for the next few sessions for us, both from a macro and a micro perspective. The big name coming up tomorrow, or the big number everyone's watching tomorrow, are CPI and retail sales. Those are, I think, on everyone's mind. Those are the next big kind of economic calendar stuff we have coming out. Also, interesting to see how Intel comes to bear on the market. Looks like right now in the after hours they're up about 50 cents still. So nothing enormous, no enormous moves out of there. I don't know. That's not enormously surprising given the fact that Intel has paid out quite a bit of money in recent months to settle a number of different lawsuits and a number of different cases, both in Europe and recently with NVIDIA. So maybe that put a damper on some of their numbers for this past quarter. Aside from CPI and retail sales and, of course, the fallout from Intel, what else are you guys watching on the horizon and around the block for the rest of the week and into the weekend?
Well, I'm going a little bit beyond that. This is when in the next few weeks, we're going to see the real market, I think, because I really believe that the first couple weeks of the year that we've had a little bit of the New Year euphoria. We had the rally going into the end of 2010. We had some euphoria and perhaps maybe a little bit of anticipation of positive earnings maybe, but the rubber's going to meet the road here pretty soon, and we're going to see if this is going to continue to rally or we're going to have a bear market. You don't know that either way, but I think that what's exciting right now is 'tis the season for earnings, and that's going to be very good to watch.
Yeah, I think it'll be interesting to see whether the number is actually going to start meriting or going to merit this, just protracted run-up we've had over the past, 5 or 6 months here. With this, it seems like nothing can dissuade these bulls that the market needs to go up. So maybe, of course, if these tech bulls are any indicator, maybe the people are looking for, expecting continued upside in a lot of these names.
Well, yeah, and the other thing, I think Goldman Sachs announced that they were thinking the market's going to have an uptick of about 15% for this year. So maybe that's another
crazy.
Yeah, it's got to come down at some point, I would think anyway, but you never know.
Here's what I'm seeing is that, adjusted for at-the-money volatility, this is the flattest I've seen downside puts since 2006. That is telling me something. There is very little fear in the market right now. It's really crazy. The Feb downside curve is flat as a pancake. Upside is elevated a little bit, which implies a lot of short put callers and upside short put sellers and upside call buyers. It's really interesting. This combo of low vol and low skew is really it's shocking given how recently we've been seeing some major market moves. But it tells you that people are just not expecting any kind of craziness anytime soon. I'm expecting a very boring earnings season off of that.
The corollary to that, I don't have it up here, so maybe one of you guys can pull it up. What are they pricing in to the VIX futures going out 3 to 6 months?
Give me 1 second and I'll let you know. The combo, the March future is trading at, let's call that 2160. So, a significant premium, actually.
Yeah.
Mark, I had someone, Mark Sebastian, I had someone call today, one of our bigger clients, very nice guy, very good trader, and it's a pretty big account. He usually knows just about everything. And he said, Tim, bring up the VXX, would you? I said, okay. And he said, now bring up the VIX. And I said, I know right where you're going. And he said, what's going on? And I was a little bit surprised that he did not
That's amazing.
Know the situation about that. And I said, all you really need to do is Google problem with VXX. I said, and you're going to get a lot of articles. And then as I started to explain it,
just send them our way to the Options Insider.
Exactly.
There, Tim. Where they should go.
So I just want to let you know, I thought that was interesting. I was real surprised to get that from him. I thought
that makes me happy because that means I can still do that trade. I have massive bearish time spreads on VXX, and then where I hedge in order to hedge the upside, rather than buying VXX calls, I buy VIX calls, and it's a really pretty nice trade. So right now I'm short the Feb 30s, Feb 27s. I'm short some March 30s. I'm short some March 27 puts. And I'm long 2012 behind it. And then on the upside, I own VIX like 32 calls. So the concept is that this thing is going to zero at a certain rate, but I don't want to have to be paying a bunch of decay while it just kind of goes into oblivion. Adam Warner made a really great joke today on Twitter that I was reading. It was, the VXX has to go up eventually. Every time it hits 11, it quadruples in price. So.
Yeah, Tim, that doesn't surprise me either that you're even a sophisticated size customer like that. We see that all the time. They're still confused about what the heck the VIX and the VXX and everything else are, and the VXN and how they all relate to each other, and the fact that to this day, yeah, I think you could just make a whole website based on just the fact that, VIX and VIX cash is not VIX, so to speak.
Right.
And you could be a busy man all day long just fielding those questions.
Yeah.
You guys should probably have a number in the dial-in automated thing. Press 4 if you're confused why your VIX options aren't trading off the cash.
Yeah.
Mm-hmm. Here's an interesting
he was
thing.
Ready to load up. I can tell. He just wasn't going to touch it. He just couldn't understand it. Yeah. So he probably had a couple, but go ahead.
This would be an interesting thing. We should maybe get Bill back on. Bill Luby. He was making a point that our volatility products going to be their own asset class here pretty soon. What do you think?
Oh, God, don't get me started on that again. We've been having that debate for like 3 years now. So every time I get invited on any sort of industry panel or asked to speak at any sort of these conferences, the first question is volatility an asset class? I think I've had that discussion like 47 times. Nice. But, I think the answer is obviously yes. I mean, if you look at it from any sort of objective criteria, volatility has come into its own. And you look at what the CME is doing now. They're licensing VIX. They're bringing it to, I think, corn and crude oil and gold and all these other commodities. So we're going to be seeing more, not less, of these products coming down the road. And so I think definitely you can just go out now and just trade pure vol. And obviously you could do that before with options. It's not a hard thing to do. Most options traders are volatility traders, whether or not they realize it. But in the purest sense that this is vol of vol, you can trade that now. And that's kind of intriguing, I think. Only in America can you trade derivatives of derivatives on volatility. Yes. All right.
I thought they rolled out some products with volatility real quick here. I thought they rolled out some products with volatility on individual stocks, I think, right? Wasn't that last week?
The CBOE announced those. I was at that event when they announced them, and they're kind of like the old VIX. They're not tradable yet. The CBOE likes to do this. They like to trickle out these theoretically interesting, very esoteric products. I think they started off with Amazon and a few other big names.
Mm-hmm. Amazon, Apple, Goldman, IBM, and Google.
So the usual suspects. And if you're going to launch volatility on some names, those are good ones to start with. And yes, it's an interesting idea. I don't know. From talking to them, I think it was a week or two ago, it didn't sound like they had any foreseeable plans in the near future to make these tradable. They're going to see how the wind blows first, see if they get any traction, see if the media starts picking it up like they did with the Fear Index. And then
with a product like with these individual products, unlike something like the SPX, don't you think it just makes a lot more sense to look at the at-the-money straddle than it does to really look at a VIX-type calculation?
That was the question I had for them. I was like, doesn't this already exist? Don't we already have this? The other thing they announced, which was kind of interesting, is a skew product, a skew index, which actually measures this degree of skew in the S&P. I believe it's an aggregate across all of the months, not just front month. Whereas obviously VIX would be confined to the front month. In a pure sense, you already have that as well. You have the VIX, and you just look at the skew out there and get a sense of 95% of the ball game. I think it's just another interesting theoretical product, whether or not anyone's going to. Maybe someday you can trade the skew products against VIX skew and do some hedging and some spreads that way. Same thing with Amazon. Maybe you can work out some sort of component ratio of the VIX to Amazon and trade it that way. But I think for the sophisticated guy, the bulk of this is already in the marketplace, but nevertheless, they're theoretically interesting. And that's one of the things I like about the CBOE is they keep throwing out things that are theoretically interesting, like variant swaps and things like that, things that never have gotten any traction from a practical sense and a tradable sense, but are still unique and relatively interesting to watch. All right, and I think with that theoretical bent, we will close out the Around the Block segment and also close out this episode of the Option Block. I want to thank all of our gang of suspects for joining me on the show today, starting off with Mr. Greasy Meatball himself, Mark Sebastian. Mark, tell our listeners about your special super duper friend of a friend deal for for Option Block listeners only.
Well, I'm giving a special class on, I call it my Future Pros Prep course. It's going to be a class on theory, volatility, the Greeks, position setup, basic position management and closing out trades. Really going to kind of set you up with kind of a solid base where by the time you're done with that class, you'll understand everything. You'll be able to understand what I'm talking about on this podcast. So it should be really, really exciting. If you use the coupon code OI, that's Oscar India 2011, you get $100 off of the $5.99 price tag. It's a steal of a deal, if you ask me.
That is a bargain at any price, especially that price.
Mm-hmm.
I would pay at least 3 times for that. Tusaw, how much would you pay for that?
What's it going to take for me to get you to buy this today?
Exactly. What's going to take to get you in this class?
I would swap out one of my classes for, if Mike would give me like a box of his books. So then I'd have I could do a giveaway combo. So I could go long with Go Long.
And listeners, if you act within the next 15 minutes, you get a second class of equal or lesser value, absolutely free.
Yeah, I like it. So.
And
by the way, if you haven't read Mike's book, it actually is a good read. Just an FYI.
Yeah.
Well, thank you. Appreciate it.
Yeah, actually it is. I think I'm not sure if we have it recommended up on our site, but we are going to probably add some store functionality sometime in the foreseeable future. And if we do, we'll have to add Mr. T's book. Speaking of Mr. T, what do you guys have going on over at KnowYourOptionsInc.com over the next week or so?
Well, we're pretty excited right now. Next week, and we're going to, typically what we do probably about once a quarter is we send out an email offering a free one-on-one webinar with yours truly. Meaning that what we do is you pick the topic, and we set up a one-on-one webinar for about 20 or 30 minutes or so, and I'll present to you on any topic that you name and that I know about. If it's something I don't know about, I'll be upfront with you and say I don't know. So if you're looking for bond yields in California munis, I'm probably not your guy. But most of our listeners.
What about kiddie snowmobiles? Can I have a webinar on that?
Well, you'd be laughing too hard if you saw some of the videotapes that we have of it while looking at me run and fall, but that's another story. But
let me ask you, I think the pressing question from a lot of our listeners, are these webinars, are they topless or are they Tusaw shirt on or shirt off webinars? So that I think is going to dramatically impact your adoption rate.
Well, seeing as I have a great face for radio, you don't even see me. You just actually see either the Brokers Express website or you'll see a PowerPoint or whatever topic you choose. You name it, and it's likely that I have it in some way, shape, or form. And with that, we're going to be rolling out our emails in a couple of weeks, but what I want to do right now, especially for all of our Option Block listeners, is we're going to let you get an early bird special. The cost is free, and with that, we have a limited amount of space, so that's why I'm doing this. This is the first time we've done this on this show. We kind of want to see what the interest is from this show before we send out our email. So time and space is limited. So if you are interested in a one-on-one webinar, call our phone number as soon as you hear this, because space will be lit. We typically fill these up, 866-903-1822, and set an appointment for a one-on-one webinar with yours truly.
And I'll be sure to put that in the show notes as well, so that our listeners can see that and dial you up and request the full Tusaw, as it were.
There you go.
That is an amazing opportunity, Mike. That is really great.
Oh, I appreciate that. It's been a very successful program for us, and that we've been doing this for about 6 months now via email, and it's been a very successful program. A lot of happy people, and if you're a current client of Know Your Options, you get that whenever you want anyway. We always put within reason, but nonetheless, we reach out to people and we like to work with people.
Yeah, that's just impressive that you would offer such a wide swath of subject matter to discuss. I mean, pretty much anything within reason that's a difficult purview to fill.
Well, usually with the audience that we have, usually I know what the questions are going to be, thankfully. So, but if I don't know, I don't know. I'm man enough to admit when I don't know something.
I imagine you have a few VIX versus VXX webinars in there.
We'll see. I haven't had that one come up yet, but if we do, I'm ready for it.
Oh, you probably also have the stock went up and my calls lost money one as well.
I've had that question. That's probably the most common question I've had in my entire career, I would say.
Imagine, yeah. Based on our volume, that is the number one question by far. That is the options question. And then, of course, Mr. T-Knob himself, Tim Nababi. Tim, what is going on over in Options Express land for the next few days?
Okay, we've got a webinar coming up on the 16th. It's titled The Condor Flies Again. On the 17th, we've got a webinar, Case for the Covered Call, Is It Worth You? And a bunch of others. So you can always head over to Options Express and just look under the Events tab. So that's
all right.
it.
Thank you, sir. And because we'll be sure to mention all of those offers and deals in our show notes so our listeners can jump on them. And I want to thank all of our listeners for downloading and subscribing and streaming this program and for making it such a hit. And we will see you next time on the Option Block.
If you're interested in becoming a professional options trader but feel a stronger understanding of trading fundamentals is required before pursuing a mentoring course, sign up for Option Pit Mentoring's Level 2 Prep Course. Topics covered will be volatility, the Greeks, position setup, and basic management of income option positions. Classes start on January 24th. Register at optionpit.com/event. For Option Block Insider Radio listeners only, receive a $100 discount when you use the promo code OI2011. That's optionpit.com/event.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.